In depreciation, we will discuss the illustration number 1. Illustration number 1. Miss Singhania and brothers purchased a plant for rupees 5 lakhs on 1st April 2017 and spent 50,000 for its installation. While purchasing any assets, any installation expenses for that will also be addable. So the total value being 5 lakhs 50,000. Total value being 5 lakhs 50,000. The salvage value of the plant after its useful life is, the useful life of 10 years is estimated to be 10,000. Record journal entries for the year 2016 and 17. Draw plant account and depreciation account for the first 3 years, given that the depreciation is charged using straight line method. Okay, and then the books of accounts closed on March 31st every year. The firm charges the depreciation to the assets account, right? So, amount of depreciation here being cost of the assets being 5 lakhs 50,000 and scrap value of the asset being 10,000. After subtracting the scrap value from the cost, which is the depreciable amount 5 lakhs 40,000 and the life being 10 years. Under straight line method, no. So the depreciable amount should be divided by the life, so that you will get the depreciation, amount of depreciation. The amount of depreciation year after year being 54,000. So year after year you have to charge 54,000. Anyhow, you are going to prepare only for the 3 years. On 1st April 2017, asset purchase, right? The entry for that, asset purchase, the entry for that. What asset is this? Plant. Okay, plant account debit to bank or cash. You can interchangeably use this. Currently we use bank account only. The value paid, the amount paid for this purpose is 5 lakhs 50,000. 5 lakhs 50,000. By the first year end, we have to depreciate this. The amount of depreciation by the end of first year being 54,000. That 54,000 is going to be adjusted in the asset account. See that the firm charges the depreciation to the asset account. Whatever the depreciation you calculate, that amount will be adjusted in the asset account, or this will reduce the assets value. The other way is that depreciation will be accumulated in the provision for depreciation model. That's another one. It is going to be added to the provision for depreciation model. This is the first model where the depreciation is the loss of the assets value because of the usage. Year on year, the asset loses its value by 54,000. That can be adjusted or deducted from the assets value. That's one model. The other model, it will be accumulated in another account called provision for depreciation. As per the first model, by the year end 31/3/2018. Okay, 31/3/2018. Depreciation is debited. Depreciation account debited to plant account. This value being 54,000. Okay. On closing, whatever the nominal accounts we have should be by default transferable to the P&L account. So I will transfer this to the P&L account. Okay, for the first year. Now the entry being profit and loss account debit to depreciation. This value being 54,000. We have to prepare for 3 years. So I am repeating this year after year for the 3 years. Is that okay? Now, for the second year, it's only a repetition. The same entry will be passed for the next year also, 31/3/19. Again 31/3/20. You have to pass these two entry again and again for the another 2 more years. That's all. So as it is a repetition, I don't pass that. I leave it to be passed by yourself. Not only that, so we have to prepare the concern assets account as well as depreciation account, the ledger account. Let me solve that also now. See here. Plant account. On 1st April 17, plant account debit to bank, the value being 5.5 lakhs. By the end of first year, 31st March 18, by depreciation, the value being 54,000. Year 1 is over. I will now close this 5,50,000. 5,50,000. From 550, 54 is subtracted to get the closing value, which is 4,96,000. Balance carried on. That will be transferable to the next year. 1/4/18 as two balance brought down. The value being 4,96,000. By the second year end also we are repeating the same. The depreciation charged in the plant account every year, 54, second year and another year also. So the next year, 31/3/19 by depreciation. The next year the depreciation is 54,000. Every year the balance of asset is decreasing because of the usage. The value loss being 54,000 in this year. So year after year I am subtracting 54 to find out the closing balance. So 4,96,000. Now the balancing figure to be transferable here being balance carried on. 4,42,000. Here 1/4/19 I start with balance brought down. Start with 4,42,000 in the third year beginning. By the end of third year, 31/3/20 by depreciation. The depreciation here being again 54,000 because it's a straight line method. So year after year the depreciation being the same 54,000. Close this. Balance carried on. 4,42,000 and balance carried on being 3,88,000. Gets closed. Is that okay? Yeah, but I stopped here itself, right? Okay. Yeah, of course you can post that. Apart from that, we have to open the depreciation account also. Depreciation account is a nominal account. Charged in the depreciation means asset account and later it is transferable to the P&L account. That's all. Whatever the amount you subtract from the plant named as depreciation, ultimately transferable to the P&L account's debit side. Charge and transfer. That's all. Not more than that. So I am opening the depreciation account. In depreciation account, the first year depreciation, 2 plant on 31/3/18, 2 plant. The value being 54,000. By the end of first year, by default, the depreciation is transferable to the P&L account as on the same date, 31/3/18. By P&L account. We don't have any balances here because it's a nominal account. Always the nominal accounts are transferred to the P&L account and it's closed. There will not be any balance to be transferred to the next account, next year. Repeat the same for the year after year. For the next year, 31/3/19, the same 2 plant 54,000 and 31,3 19 by plant and profit and loss 54,000. This one is over. This one is over. The next year will be 31,3 20 2 plant. Again, the depreciation for the third year is also the same, as it is a straight line method of depreciation. Whatever the depreciation you subtracted from the asset account is by default transferable to the P&L account as it's being the nominal account. We don't have any balances year after. Okay. Come on, finish up telling this.